Good morning, traders, and welcome to the Bookmap live trading webinar today with Scott Pulcini. As you guys know, we do this every Thursday at 10 a.m. East Coast time. It's all part of the advanced webinar training. The concept here is we have our advanced or our online course. It's on YouTube. It's a video course. It's 4 parts. And then we go through live analysis in the live markets, and those are recorded as well, so that you can learn from the course and then apply it directly into the live analysis, forward-looking analysis, not hindsight. That alone is, we think, of tremendous value. We have other traders doing it as well. And then we have live trading with Jay Trader and Scott Pulcini. So it is in demo paper trading mode. So let me go through. You guys know who Scott is. If you don't, he's got pretty incredible backstory here. I have his contact information here as well. He does offer mentorship, so you can reach out to him. I need to go through the disclosures, and you got to understand what you're getting involved with in here, because it is in demo mode and only for education. So general disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendation. Live trading is in simulation, demo paper trading mode, and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. All right, so one other thing I want to go through and just mention here on our Discord channel, there is a special event. So let me show that here. It is, if you go to here, let me show you. If you go up to here in events, click on events here. And then you can see the special event in here. All right, so it is a webinar tomorrow. It's about the trading competition that we have. It's all next week, and we have, go to, I put the link in here, right here, bookmap.com/tradeovate for all the details, and that'll take you to this website here. And you'll see all the details and what you get. There's a couple of videos in here, how to sign up, how to compete and connect, etc. It's a nice offering. You get quite a bit from Bookmap, yeah, it's all free, and you get this is a $3,000 first place winner here, I guess. So this is a real nice event. If you want the details, go to the Tradeovate link. But we have the event tomorrow at 2 p.m. East Coast time, also to answer any questions that you have. All right, so I just want to mention that. And we'll probably have events next week regarding that as well. So, all right, just wanted to mention that. Scott, are you in here?
Yep, you hear me?
Hey, there you are. How are you?
Good, how are you?
I'm okay. Just busy as heck. Let's see, if you want to share your screen and then I can rebroadcast it.
Yeah, 1 second here.
There it is. Let me pop it out. Got it. And let me move it now. Hold on. Okay, there it is. Good Lord. All right. I got it now. You're all set, Scott.
Okay, cool. Yes, a lot going on here. You have Paul was just talking ECB released change in interest rates. Actually, looks like it kept them the same, and then Yellen's talking, and just there's a lot of info hitting the market. So the last volume event here in Nasdaq that I'm watching is the stop run fired off right at the open here. Yeah, sell stops. So this is a Dumb and Dumber, one of my 6 distinct setups where you have the dumb money puke, the retail trader puke. Again, don't be offended. I'm a retail trader as well, but we are not as informed, meaning we can't trade as big and push the markets around like the bigger funds, houses, so on and so forth. So puke, that's not real selling. Obviously, it's just someone puking, and then the market rejected that. This was actually a pre-market zone, comes back and touches that exactly. So I wasn't trading this, especially because I always revert to the newest volume event. I'm waiting for a retest of this zone, and then a failure back outside of an ATR, and then I average true range, and then I will go long. We'll go over that here as it happens, but I'm waiting for a retest of this zone first and foremost. Yes, I was going to go along this aggressively. There was some sell ice here. There was a bunch of stuff pre-market as well, but the most recent setup here, you can see this close to 1,000 sell ice here. And we are above the yellow Ludwig level, which we'll go over. And when we are above the yellow directional Ludwig level, I take trades aggressively to the long side. So I was going to take this just outside an ATR. This did move down below this zone pretty close to an ATR at the time. Let's see, the bottom of the zone was 68, and we got down to basically 59 and a half. So that was an 59 and a quarter. So that was an ATR below there. So, you know, when markets, this is actually a potential short setup now for me, where so I was going to go long, but once it violated an ATR below here, that disqualified the long for me. So I'm going to cancel this long. And then what I'm watching here is I'll potentially go short ES based on this setup, right? So we got a full ATR outside of here. Here's your retest. If we go failure, I will go short ES. So hopefully I don't have dueling positions on, but you know, it is what it is. I trade my areas, you know, based on the either conservative or aggressive, and this would be a ATR retest failure. So I will short this. We'll go over all this with the logs and everything I'm looking at. I look at. So right now, currently ATR, again, this is average true range. This is just a default from Thinkorswim 9.29. That's the same thing here. So it's just saying the average range right now is almost 9.5 points. Oh, that's changing on me. Hold on. Actually just went down to 8.74. So I usually enter my trades about 10% outside of an ATR, so it's basically around 9.5 points. I will short this market if this fails back out of here. So the bottom of the zone was again 68, so that puts me at 59, 58 and a half. I will short this. So I didn't mean to do that. Let's see, 58 and a half. So that would be outside the ATR. I didn't want to do 2. One second here. All right, so I will short that. I was looking for a retest failure to go long Nasdaq, this zone down here, so that never touched it. So this is still in limbo, but I will short this market here. And then we'll take a look at the lugs and what I'm talking about. I'm also currently short wheat. We'll go over that here in a second as well. So these are, you know, I use these in conjunction with the SI setups. It helps. They're incredible for day trading. The you know, the support and resistance are incredible areas. I'll show you one here quickly. Crude, how how well these things work. We came up here in crude just very recently and rejected that. So these are resistance until broken, and then you form new ones and so on and so forth. But these are what I use for targets and to kind of understand the context of the day on top of, the bigger picture stuff that I look at. So right now you can see we are above the yellow lug. So any setups I get above the yellow lug, I take aggressively. So meaning once it gets just outside an ATR, 10% outside of an ATR, I get in aggressively. I will still short above the yellow lug. So say we get a setup, but I need to see a full ATR, a retest, a failure. And that's what I'm doing here in ES. That's what I have ready to go because we did get the full ATR below here. Here's your retest, and if it fails, I will short this. Again, I was going to go long this setup when it came in, but it disqualified it as a long. If the market is able to push outside an ATR or more outside of the zone, then the other direction trade is disqualified. So all I can trade this right now is on the short side. So I will end there at 58.50. 1 second here. All right, so that's locked and loaded, and we're just waiting for something to happen here. I'm short this. There was a volume set up here, 189 sell ice. I shorted this aggressively just outside an ATR. I follow my same rule. I have a set of rules that I follow, and I do the same thing every time as best as I can. And sometimes I make stupid decisions, mistakes, but I've cut those down dramatically over 20 plus years I've been trading, but I still make some stupid mistakes sometimes. But my general rules are in place that I do not violate, right? So the ATR right now in here is, you can see in the middle of the screen there, 3.70. So I got in on this trade just outside an ATR. The bottom of the zone was 38.50. I got in at the time it was less than that, so I got in at 3.5 cents below there. So the ATR was a little less when I got in this trade. So the reason I entered this one aggressively is because we were below the yellow lug, right? When I refer to them as the lugs because I don't feel like saying Ludwig level 400 times in a day. Again, I say it every webinar, ludwiglevels.com. She's got a free 3-day trial. You guys can try them out for free. Say you saw them on Bookmap. She has special pricing if you end up getting them. But that's what I'm using here. And so we were below, the setup was below the yellow lug, so I take my shorts aggressively, meaning just outside an ATR. So you can see right here, it's kind of struggling at the baby lug, but if we break that, this is my target down here, 817.50. So I'll be watching that closely. And then another trade I'm watching, this was crude. We had a volume event. There's actually multiple volume events. She had a bunch of stuff here. I erased those zones because something new came in, but she had a huge stop run here. So it was over 300 actually. Let's see here. It was like 320 or something. 297. And then you had buy ice. So this is actually a unicorn setup that we call, and my sixth setup that we just adopted recently, called Step Brothers. So Step Brothers is when you get a buy stops and the buy ice come in. Again, I erased that zone because this new volume event happened, but this whole area is important, put it that way. So whatever way we finally break out of this area is probably going to be the bigger move. I'm leaning more to the downside, especially if this had a chance just to rip here and it did not, and we'll go over these my longer term picture here, but you can see that then the sell ice came in, right? Someone tried to hold it and it was able to get outside, almost 2 ATRs outside here, and then failed. Now we're retesting. So the red lug was right here as well. So I would not have, that's why I didn't buy this aggressively, this setup. Remember, if we're above the yellow lug, I get long aggressively unless we're into the red lug. Or selling, I don't sell into the blue lug. So I was waiting to see if it can puncture through that red lug and then build new lugs. It failed. So now, if this fails and gets below this area that I just showed you, this market is probably in trouble, right? And this market's been very bearish lately. This is basically the whole area here. I probably shouldn't go up there, but this and this, there's a lot of volume, a lot of loaded up traders, so I'll probably sit in here for a little bit, and then whatever way this breaks, and I'm leaning to the downside, you should get the bigger move. So on the bigger picture, this is all stuff that you want to have, noted in your mind, and you just come up with these if-then scenarios because you never know what's going to happen, but you come up with the scenario as best you can. So when I look at this chart, obviously this looks like a very bearish market, right? So we had balance here. This is multi-week balance, right? And we just broke down from there. And then inside this balance, there were other signals that this market was going to break down, right? So everything's fractal with balances. Markets are one of two states. They're either balancing or directional conviction, and it happens on all time frames. So this right here was a failed breakout, right? And then it tried to hold, and then we built more balance and actually broke out of that, and that turned to be a failed breakout. And then the most recent, this one, was just a flat out breakdown. And then you put all those together, that's showing you that that's going to happen. And I think this is our next stop down here. It doesn't mean, I don't mean, potentially today, but overall, I'm leaning more towards this. Crude has a very strong tendency to always come back first, then go. So what you want to do, if this was a very important zone if I have zones drawn and they extend, there's something back here, we'll try to find it, but this was an important zone, and you can see we got through it, and now we're just retesting. So this was a support zone. Once it breaks through, now it's resistance. So this is a very good place. These zones that I draw based on the 4 important areas of charting, which we'll go over too, are great places to take trades, right? So the expectation is this should, since this knife through this zone, this should hold and do that. If this is able to get through here, well, then I'm looking back to these zones for a potential short, and all that is basically this balance area. So when markets break down out of balance, they have a tendency to come back to the bottom of balance and then fail, or they can even make it all the way back to the high volume node and fail. High volume node, refer to HVN, that's just the middle of a balance area where the most trade usually occurred, and that can happen as well. If it ends up doing this and it gets through the high volume node, then that is a major failed breakdown of that structure, and then you expect the bigger move that way. Right, so right now this is still looking bearish. It doesn't mean we can't post rallies to these areas I just showed, but you still have to lean on the sell side until it shows you something different. And right now it's basically struggling in here. I can totally see that. It doesn't have to come back here, right? So if I get my volume event, I'm ready to go. And I know this area in general, there's some loaded up traders. Granted, the latest setup here was not bearish, so I'm waiting for another setup, and I'm not going long. I will go long this market again, because I'm a day trader. I know the bigger picture's short, but I will go long if we can get through this slug, break through the slug, and build new lugs. But until then, I'm still leaning to the short side. So the latest setup is bullish, but I'm not taking it because we're into the lug. So my point is, if this fails again and then I get another setup and it's bearish, then it's go time, and I really want to short based on everything we just talked about. So just a quick rundown of crude and what I'm looking at. This is the stuff you have to go through in your head, and then when things line up and then you get a volume event in your favor in the way you think the market's going to trade, then you can trade bigger size and obviously within your risk parameters in your account. But that's the whole goal.
Stocked by GC. 307 contracts.
Right, gold is just the stop king of the world. There's got to be the worst traders on the planet trading this market. It's nothing but stop runs back and forth all day long. That's why it's such a chop fest. But since nothing's going on here, we'll take a look at it. You can see the stop run just fired off 307. That's double threshold for gold. Threshold meaning, a lot of traders, when they get this, they're like a kid in a candy store. They can't wait to trade these spikes, and they're just trading any spike that occurs, right? You've got to make sure that you are, for the selected market you're trading, that the volume event is significant enough to trade, because every spike, is potentially meaningless. You want to see enough volume that is big for that market, large size for that market, and that's one of the things my SI indicator course goes over. I think I cover like 23 markets and the thresholds of each market, right? Because 150 in here is a lot, or 300 in here is a lot. 300 in ES is nothing, right? So you've got to know your thresholds for market, and I adapted those a couple years ago in a few months of watching these setups occur to figure out, okay, what's a lot in this market? This is not a lot in this market. And 2 years later, since I made that course, they're pretty much all spot on. The only one that's a little off would be bonds. I think I had 250 or 300 for bonds. I've moved that up to 500. But other than that, they're all pretty much spot on. And I think in gold I had like 100 or 120. You can use 150 in gold. I moved that up a little bit, but other than that, it was pretty spot on with those thresholds. All right, so I'm going to put this, in case I'm not on the screen, which happens all the time. I've been making so many errors lately because we got a lot going on in my trade room. We're working on these different trade setups and different tests, trade tests of different setups with the SI indicator zones. So I've been I'm trying to do it on my account and my auto trader account and in the room. It's just, the point is I've been making a lot of mistakes. So you can see this blue lug is at 1750. So I'm just going to put my bid right down here. I'm going to go a little bit, I'm going to go about a point in front of that. And we'll let that, just in case I'm not paying attention and it swipes down there. All right, so we are still waiting for something to happen here. Very quiet. Actually, I forgot to put on my tick strike. Hold on. Otherwise known as waterboarding. It's great when it's in your favor, but like I say all the time, it's not so fun when you get to watch your trade go against you and you get to listen to it too. That's not very fun. So let's see here. So these were both pretty close to threshold, right? So you had my threshold for ES stops for the mini S&P are 500. So this one was 456, and you had another one 477. This one we can actually draw. That's close enough, especially there's not a lot going on right now since Powell stopped speaking. So we'll draw this one, and we'll see how the market reacts to here. So I try to color code my zones so I know what type of setup it is. So I use yellow and white for stops. All right, so first and foremost, again, this was just under threshold, but I'm going to count it. You have to make some judgments sometimes, right? I usually don't go less than threshold. I'll always increase it, meaning if my threshold for icebergs and ES is 700, which it is, and I keep seeing 1500, 2000, 1500, 2000, I'm not using 700 that day. I'm upping it, right? So I will always move it up. I rarely move it lower. This, like I said, this one was close enough. Then I'll draw the zone on that. So my point is, I was going to short this market, and now that is done because negated because we have a new volume setup. So now I can still trade off of this. This looks like it's already an ATR below here. And if my members of my room are listening, we're working on a trade, more of like a proprietary trade for members of my room, but it's based on ATR and stuff. So this is a potential setup for them. Hopefully they're paying attention here. But anyway, this was an ATR below here. So now if we go retest failure, I'll short off of this setup. You can hear this is one of the benefits of tick strike, right? So I'm not watching these markets and I know they're hammering grains, right? And then lo and behold, look at this here, bounce right off the prior volume event, right? So I say it nonstop all day, every day. Real-time volume is the driver of markets, and then the SI indicator is, the king of telling you what's really going on in the real-time volume. So it's not a coincidence that this market just put this in and then came up here and bounced off here. So I'm actually waiting for a retest there, and then I'll try to short this. But back to the tick strike, this is why I've been using this product for about 12, 13 years, and why I originally was using it is just because I can't keep an eye on 15 markets at one time, right? It's been a lot easier with the SI indicator, with the subchart, with the voice alerts. So when you get it, you can come in here and you can program it to say whatever you want, right? So, or you can type in whatever you want to say. So this has helped me pay attention if things are firing off in other markets, but I've always used this initially just to know what's firing off. So you can see they're hammer and wheat, right? It might be a straight shot to 17 there, which is good. And then the other reason I'm using it is to help me. So these are all the stocks for the indices. These are the highest weighted stocks in the indices for S&P and Nasdaq. which derive the futures, right? That the futures are derived from. So I know you can use this as part of your trade plan, just as part of your playbook or whatever. When you get in important areas, if you don't see these firing off max, so that it goes from 1 to 15 as far as sensitivity. 15 is the most aggressive selling or buying. 1 is just a fires off every 2 seconds, right? So here's an example. This is part of my trade room too. Like I have this in one of my other channels. You can see here, these are all set for 1, so they're firing off nonstop. I don't have the sound on because I would go crazy, but you can see these are firing off in any kind of buying or selling. So these are set for, I have these all set at 11. You can see 11, 11, 11, because I only want to know if there's serious buying or selling occurring in these stocks. And that just helps you, especially like say if you got a target and you're coming up to the target, say you're long and you're running up to the target, and these things are 15, 15, 14, 15, 15. Well, you probably don't have to get out at that target. You can try to see if it'll push through there because they're buying the stocks like crazy, so on and so forth. So you can come up with strategies with this as well, and it just helps you in important areas, right? So
Stock sell GC, 634 contracts. Silver stock sell SI,
that's a lot.
176 contracts.
Maybe trading this setup, that is a lot. So my chirping, I'm pretty sure this was a short, and I just missed it. We'll look at the lugs, but if we were under the lug, I would have shorted this aggressively. I'll show you what I would have done here if I was short. Now you can trail your stop on this newest setup and or add. I'm going to be mad at myself if I miss this trade, but it's been my MO lately is missing trades and making mistakes. So I'm not very gung-ho of trading gold lately. It's just been very hard to trade, and that and crude actually since the Ukraine war. But when you start getting size like this is you want to be participating. We'll take a look at the lugs here. So I'm sure this is, what do you know? So that first setup that I drew just a little bit ago, I should have been short aggressively. Why? Because we're below the yellow lug. So I should have been in an ATR below here, and now I would be looking for this as my target. You're going to see here probably firsthand how well these things work. It's probably going to bounce off there. So this is just like crude and the other way. Remember I said I wouldn't go long crude into the red lug? Well, I'm not going to go short gold into the blue lug. So I'll wait for these to form in lugs. But you saw what happened up here too. This is one of the best setups there is in lugs, where it tries to get above the major red, or she calls it big red or big blue, and fails. That's usually a sign that it's rolling the other way. I mean, how good was this trade? Especially you get your volume set up. That's what I do. That's what I look for. That would have been an incredible trade. I don't even want to look back to see if there was a volume set up there. I think that was overnight because it's going to make me sad. Yeah, I was sleeping, but I probably bet there was a volume set up here. So anyway, you have a volume set up here, 600 stops. So my rule actually is, because these are such strong support and resistance, I will go long aggressively. So remember what I said, if we're below the yellow lug, if there's a setup, I need to see a retest failure to go long, except if we're at the major lugs. So if this gets a little lower, I will, stays within in this zone, or within the ATR, I will go long aggressively off the 600 lot stop run as a Dumb and Dumber setup, meaning the dumb money puke. It's not real selling, and then rejection. So we're going to keep an eye on this right here. ATR is 26.1. You move the decimal place in this case. You can see it right here. So we're watching. So we know 26. So as long. So my point is, blue lug's right down here. Right? Let's see the exact price, so I can give you the example. Because the setup was close to the blue lug, but it wasn't actually on the blue lug. So 1712.6. So I just used the last two digits. So let's say 26. So this can get below this zone, not violate the ATR, right? Touch the blue lug, and I can still go along this aggressively. So why I'm saying doesn't violate the ATR, because if this gets outside of the zone by more than an ATR or more, that disqualifies a long setup for me, like we were talking earlier. So my point is, this could still move a little lower, touch that blue lug, get above here, and it'd be a long for me, aggressively. We have not touched the blue lug yet, so I will go long this setup, but not aggressively. I want to wait for the blue lug because that's my rules. But I can go long here if we get a full ATR, meaning 26 ticks, ATR, retest, fail, then I'll go long. So we'll see how this plays out. Hopefully I won't miss it like I missed the short right there. All right. So now as far as ES is concerned, here's your retest. I mean, this happens nonstop all day, every day. Here's your ATR, here's your retest. Now if this fails, I will go short. Let's see the ATR in here. My usual, lost my... There we go. ATR is up to 10, right? So this is another thing you got to pay attention to. We talk about this every webinar, is you've got to adjust your size based on your risk. So, I mean, this is telling me, you know, so if I get in here, so let's just put this in because I'm going to short this if this comes back. 83.50 is the bottom of the zone. ATR is 10, right? So I get in an ATR just outside an ATR. So an ATR would be 73.50. That's 10, right? And then I go 10%, which is one more. 10% outside ATR puts me at 72.50. I don't like shorting into prior zones or, you know, taking trades into prior zones, but I will take this trade. So again, stop run, Dumb and Dumber. That was threshold 2. Full ATR out at the time, came back, here's your retest. Now if it fails, I will short right there. Then my stop's gonna go outside of an ATR above the zone, right? And I know what, you know, a lot of people are saying, well, I don't want to risk 20 plus points on a trade. Well, first of all, I don't like risking 20 points on a trade either, but the current volatility is telling me that I have to take that kind of risk so I don't get stopped out by random algo nonsense. And that is what 85 to 90% of the trade is random algo nonsense. So that's why I get my orders outside of random algo nonsense, right? So we are, again, for all you junkies that need action nonstop and want to scalp, we do have a new method in my room that we've been working on. It's been very, very, very successful. I did a test trade. We named it a certain test trade, and I did it on the Apex account, and we qualified in, like, you know, it was about a week, and that was with a couple errors too. So now I have a live account that we're trading more of a scalp trade. It's not I don't like using that word, but it's more of a, you know, in and out type of trade. So for you junkies that need action nonstop, what I usually tell people is if you need action, then pull up some horse racing while you're trading. Don't try to get it out of your trading. But this is more of a, you know, you're getting signals nonstop, put it that way, and that's part of my trading. Not sure why I got on that tangent, but anyway, if this fails, I will short this. Oh, because what I was saying is not all my trades are risking. This is my position trading strategy, right? So meaning, if I get in on this, I'm thinking this market can move pretty significantly. I already know we're close. It's not really close to the red lug, but you know, if I end up getting short this market off of that setup, there's a lot of room to the yellow lug and blue lug. That's, you know, 60 plus points down to that blue lug. So with the current volatility, I think if this trade setup works, we could make our way back down with a blue lug at 30, whatever that was, 39.20. Yeah, 39.19. So I have different strategies. This one is my position trading. So meaning, again, ATR is 10. So if I get filled on this, I've got to risk 10 points above this zone plus the size of the zone. So if, say I get filled on this trade at, what did I say it was, 72 quarter, and then 10 points above this zone, 11 points above this zone puts me at 98. Right? So you can see here, just put this in for visual. Hopefully I won't get filled on that. All right, so I'm in at 72.50. I'm risking up to 98. That's 25 and a half points, right? Or 26 points, whatever that is. That's a lot. But all you do, you know, if the current volatility is demanding that you, I'm going to get this out of here so I don't get swiped into this trade. If it's demanding that you take that bigger risk, you just have to cut down your size. So then I use my ATR calculator here, right? So in any given trade, you put in your account size, and then in any given trade, you should be risking at max 2%, 1.5 to 2%. So this tells me I already know what I need to risk, right? I just said 25.5 points. That means I can put it on a 3 lot, borderline 2 lot, right? I don't know what that was. All right, so I don't want to delete that yet. So if this is able to pump to get an ATR above this zone, then this short idea is disqualified, right? The long is already disqualified. Why? Because we got a full ATR below the zone. So that disqualifies any long setup, and I'd have to wait for a new setup to go long. As long as this can hold and not get outside an ATR above here, I will still short this market. Hopefully that's not confusing. I'm sorry, I don't know where that alert is coming from.
Iceberg buys ES, 208 contracts.
It might be soybeans on there.
Scott, if you go to file and alerts, it should show up there, right? Or
No, sure doesn't.
it doesn't.
Nope.
Soybeans?
No, that's just the setup that just happened. It won't tell me where the sound's coming from. Sometimes it flashes, but I'm not seeing it, and it gets really annoying because, again, I'm watching like 17 markets. I sit there like, because it'll be alert from like 3 days ago that I forgot to delete, and I'm just like searching for where it's firing off. It gets really annoying, and you guys are about to experience that. So I don't know.
Okay. I thought it showed up in the alerts message, but
no, sir.
okay.
All right, so you see here, this is very, not very big, but this is big buy ice coming in soybeans here, and then you also had some over here. That was threshold that I missed. So we're going to incorporate this and this. So this is an important trading area. Meaning somebody was selling it aggressively, and the hidden buy ice, that's what icebergs are. They're hidden orders in the order book because the big money doesn't want to flash big size in the book, unless it's liquidity, meaning they want to get filled. But if someone came in here right now and put a 300 lot in, the algos would run it away from the market if they wanted to get in immediately, right? So they hide their orders with icebergs. That's what icebergs are. So somebody was selling this aggressively and they got a mouthful of ice. So the point is, this area is what is important. You don't know why they're using the icebergs. Hold on here. Just want to keep an eye on these equities. You don't know why they're doing it. You don't need to know why you're doing it. You need to know the area is important because there's loaded up traders in that area. That's all you need to know. You're never going to know why they're doing it unless you're sitting behind the person or firm that is putting on the order, right? It's just, you're never going to know why, and nor do you need to know why. You just need to know there's traders loaded up in that area, draw your zone, and then play your zone with some rules. I say this every webinar too for 3 years. These are my rules. My rules are the art. This is the science. The science is there's no disputing there was almost 500 buy icebergs in this zone. How I play them, that is the art, right? And this is you'd be wise to listen to me and at least adopt some of my rules, I should say, because I've watched thousands and thousands and thousands of these setups, right? But it doesn't mean you can't come up with your own strategies for this. There's no disputing this. You could trade these in different ways. You could say, hey, Scott, I know this is a really important support zone. I don't need to see one of these. I don't need to see ATR retest failure. I don't even need to wait for it to get an ATR out of here. I'm just buying directly in this zone, and I'm going to roll the dice on that. Fine. Trade however you want, right? It's your money. You do whatever you want with it. I'm just saying, from watching thousands of these, until you have thousands under your belt that you've watched, you may want to adopt some of my rules in trading these, right? And I have an edge and I'm successful and it's profitable. So there's nothing saying that you can't watch enough of these and say, you know what, okay, certain instances I'm going to get in right in the middle of the zone, or certain instances, I'm going to wait for, I will wait for the ATR retest, whatever, or you don't use ATR, whatever. But my point is, this is the important information. How you trade them is up to you. But if you're just starting out and don't know what you're doing, I highly recommend you follow my rules. And there's going to be traders. This is another thing too. So back to my room, like we're going over this exact strategy with the exact rules. It is just, you don't have to think at all. It's like if A occurs, then you do B, C, E, in and out of the trade, right? I don't care what method I show with whatever rules. There will be traders that will screw it up no matter what, right? So it's like I say, hey, you want ATR retest failure to get in the zone. Somebody somewhere is going to be like, okay, here's the zone. I'm going to get in right in the middle, and I'm going to add here and add here. Like it's just human nature, right? So the point is, you can come up with your own rules, but I highly recommend you try following what I'm doing at first, and then kind of adapt as you learn what you're looking at. All right, so let's see. Did this get an ATR above here? Only got about 7 points above there, so that short is still in effect. That is not the right chart. Hold on here. Any questions on any of that, Bruce? ATR is 9.71, so that did not get an ATR above here yet. So my short is still in play, right? You got the crude
no questions yet.
Okay, cool. Actually, I think crude already came out. No, I guess it comes out at 10 now. I thought it came out at 9:30 on Thursdays on a holiday week. But so I guess crude numbers in 18 minutes. So it's going to be very interesting when this number comes out again. I'm leaning short for the bigger picture, but we'll see. We'll see what happens here. So even if something fired off right now, I probably wouldn't put a trade on this regardless. Something new, because the crude number. So you got to remember, guys, when you are trading, when a number comes out, when somebody's talking like today, Powell or whatever, the FOMC interest rate hike, whatever, that's new information in the market. So I don't care how many zone, how confident you are in the zone, or you just drew it and you're waiting for a retest. New information in the market, this stuff is negated, right? So you got to be very, very careful trading any strategy when somebody's talking or there's a number coming out. Like, all bets are off. So just remember that. If you're playing zones and they don't work through a number, you know why, right? It's new information. All right, so this is almost an ATR out of here. That is an ATR out of here. So now this short idea is canceled. And now I just wait for a new trade setup. The other thing I keep an eye on is relative volume. So you want to see, like many times, you can see here, we are at extreme standard deviation of VWAP, right? This is VWAP. This is the 1 standard deviation they call daily value area. This is the 1.5. This is the 2. Many, 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 many times, algos will come in and revert these markets, reversion to the mean market, or reversion of the mean trades, right? There's many algos that do that. So it doesn't mean every time it does that. No, when the big money comes in here, it disrupts the algos and it pushes, and it continues to push these algos, and it's like a self like a cycle where you get these algos shorting and the big money pushes it, and the algos puke, and the algos short and the big money pushes it, and then that's when we call it a hugger, when it hugs these standard deviations. What is a good judge if it's going to be a hugger or a reversion? We look at the relative volume, right? So the relative volume is low or not extreme. The likelihood of a reversion is very good, right? So you can see here, this relative volume isn't great. It was very good when Powell was speaking, surprisingly, right there. That means it was over 2 times normal, 200%. But right now it's about normal. But you can see they're all also buying these stocks. So not that I'm going to put on a trade here. I'm just giving you an example of where you can come up with more of a day trading type thought process, where you're like, okay, hey, we're extreme standard deviation, and what you also want to look for is when you get into these extreme standard deviations and it's confluent with something else. So you can see right here, right now, this is a really important area in ES, right? So this was a couple days, a couple days ago, whatever, Friday, when we died. Tried to get outside here and then died and did one of these. These are merged days now, but that's what happened on Friday. You got to do is look at it. So this is a very important area, and we're here. So if the big money doesn't come in here, there is a very, very high likelihood that this reverts. So I would love to see a short setup occur right here, but I'm just sitting here waiting because, again, the SI indicator volume is my main driver. So I have this all in mind, but I'm not doing anything. I'm not just throwing on a short here until I get a confirmation of a volume setup, right? That's the way I trade. I better get this out of the book so I don't somehow get filled on that. Check this. All right, this is very close. I'm probably just going to exit this trade right here, or at least a couple of them. This is very close to the lug. I don't need to try to squeeze out. I know how important these lugs are. I don't need to try. I'm going to get at least 2 here. I don't need to try to squeeze out an extra couple points and watch this thing rip back 15 cents on me. I got this on another account too. All right. So that one worked perfectly, right? Usually I miss the perfect trades. Usually I'm tortured all day long, but I caught a trade like this in soybeans yesterday too. Again, that was the aggressive entry below the yellow lug. Got in there, risked an ATR above there, outside, just outside an ATR. Caught a awesome move. It's 15 cents. It's equivalent to 15-point move. It's the same tick value as ES. Do you like 15-point moves in ES? That's the same thing, right? And guys, it doesn't matter what futures market you're trading. That's the whole key. Why? Well, because volume runs the show. Volume is the same. It's loaded up traders in ES, wheat, gold, crude. It doesn't matter. And if you understand how to read the volume events, you can trade any market. I know a lot of you love staring at this crappy ES all day long, and what happens when you're just staring at one market is you're not getting trade signals. Like this is a perfect example, right? Like I look for my SI indicator signals right here, and I'm not getting it, but I know we're at an important level where this may die. Well, you start to get antsy and say you're using the same thing I'm using, and you're waiting for a setup, and you're like, well, my rent's coming up here. I haven't traded in 2 days. I haven't had a setup, and we are at extreme standard deviation, so I don't have a setup, but I'm gonna short it anyway, right? That's where you get into trouble, especially if you're just staring at one market. It's like you force trades when nothing's really going on. Everybody on here, I'm sure, can relate to that, right? If you're watching multiple markets, it doesn't have to be 15, 17 like I'm watching, right? I just have the bandwidth for that. It's just how my brain works. Some people can't watch more than 3 markets, right? I don't believe you can't watch more than one, especially if you're looking for something specific, right? So if you're just looking for volume setups, you should be watching at least three to 5 markets. And all you're doing is you're waiting for your volume setups, right? And they don't happen in that market that day, you have another market you can watch, right? If the equities are dead that day, I can trade grains, or I can trade natural gas, or I can trade crude, right? That's the whole point, where you're not staring at one crappy market and forcing bad trades. Ludwig levels. No questions, Bruce? It's an awesome teacher.
Yeah, pretty much. No questions.
All right, so there's really nothing firing off here. I was going to go along this gold trade. It got a little bit below and touched aggressively. I'll still go along this, but we have to wait for what? Because we're below the yellow lug. What do I have to wait for, Bruce? I'm going to just start quizzing you since nobody's asking any questions.
I'm sorry, Scott. There is a question coming in, so I didn't even hear yours. So what was yours again?
I just asked what I need to see to go along this setup, because we are below the yellow lug. What do I need to see to go along this setup? Because it didn't bounce off the blue. So what do I need to see if we're below yellow lug in my setups to go along? I'll give you a hint.
Yeah, you need to see your retracement and then retest.
ATR retest failure. Exactly. All right, what's the question?
So Sherry is asking, how do you know what the volume setup is? And I know you have an answer for that, so I didn't want to type it all out here.
How do I know what the volume setup is?
Yeah, it's something you came up with your own strategies here from your own studies.
Right. Well, it's my own studies, guys, and this is not hypothetical stuff. This all goes back. I cover this every webinar as well. It goes back to me when I was a large trader. Right. Back in the day, I was a huge scalper, meaning I was trading huge size, and I was in and out all day, watching every tick of the order book, the dome, all day, every day. Right. So I know how I used to react when I would get loaded up with a bunch of size and it would move against me. Back then, you can see counterparty, meaning you can see exactly who you're trading against, and I would watch how they would react if they were loaded up with size, and so on and so forth. So my 6 setups are not hypothetical. It's based off of when I was a large scalper in the mini S&P, right? So how I find the volume areas is the SI subchart. SI stands for Stop Iceberg subchart. This is in this MBO bundle. If you go to the Bookmap marketplace, I'll just show you guys because I get a lot of questions on this. It's just Google Marketplace, right? You go in here, and it's, where is it at? Right here, MBO bundle, right? So you need this, and this gives you all of these different things based on the CME MBO data. The MBO data is the enhanced data that the CME has now released for the last, I think, 3-4 years ago. They released it. They released it to the general public. Why did they do that? For more transparency. Why do they want more transparency? Well, because there was a time period where the retail traders were dwindling, right? And it was basically shark eat shark. It was algo versus algo. There was no volume in there. I mean, the algos exist to take our money, to take the retail traders' money. That's what they're doing. If you guys think there's anything different, you're sadly mistaken, right? So if there's no fish in the pond, then it's shark eat shark. And you got to remember the CME makes their profits on commissions. And if there's not a lot of trade, they're not making any money. So they probably said, again, this is just my hypothesis, and I'm pretty sure I'm right. They said, what can we do to get the retail trader engaged in these markets again? Let's give them a little more information. Let's dangle a little more information for them to give them some confidence in what they're saying. So they released the CME MBO data that is now lets you see the icebergs and the stop runs, so on and so forth. We did not have this information before, right? The big money, I'm sure, had programs that can read even it was called the MBP, market by price info. Even with that, the big money couldn't really tell. I mean, they did what Bookmap did. So when Bookmap first came out, they had a good idea what were icebergs and what were stops based on the order flow. And Bruce can speak to that better than I could. But the point is, there was a way to kind of figure it out if you had the right algos. When this came out, they can tell with 100% certainty what the order flows were. Their developers came out. I'm talking Bookmap. Now they can tell with 100% certainty what's going on, right? And like I said, I think the whole reason the CME did that is to get the participation from the retail traders, so the big money can take your money, right? I mean, yeah, you have more information, you should do better, but retail traders still make mistakes even if you have all the information in front of you, right? So the point is, you need this to have the SI indicator, right? And you can see it shows you, it gives you the SI subchart. That's what I trade and draw my zones off of. You're just asking, how do I draw the volume area? Well, that's that. And I'll show you that again. Icebergs on chart, right? Stops and icebergs on chart. That's what you see all over my chart. Liquidity tracker. We haven't gotten into this. It's just showing you. I can give you an example. It's pretty simple. It's just showing you here. I'll show you. So let's keep an eye on IES since I have an order working in that. Actually, wait 1 second. I want to say. Well, quickly before I get into that. So you asked how I know the area. Well, that's what this shows you right here. This is the area. So this was the spike. You can see it was on chart here, and it was down here. This actually ended up being exactly the same. Sometimes you're going to see different on chart versus here because of just the way the orders come in. Bruce again can speak to that better than I can, but the point is, I trade off of this. The sub chart is what I trade off. I don't draw my zones off of the on chart. It does help you draw zones, and then I have the sweeps indicator as well, which just shows that you can see these big red bubbles. These are actually, I should have the opposite for absorption.
655 contracts.
I'll come to the bonds in a second. This just showed that somebody swept the order book. Well, what was the sweep? The sweep were the stops, right? So that's the zone. So the way I draw these zones is I find the volume event, which is this. You come up here, you get your little crosshair, and you see where this started. And a lot of times you got it, when stops, for some reason it will pick it up. You see the spike happen after this started here. So just make sure you can see this very clearly. These selling events cause this trigger of the stop run. So just incorporate all of this in when you see these sweeps and these big red bubbles. Even though the stop run shows here a little later, it doesn't happen that often. But when you do, you can incorporate the whole thing. But that's probably a little confusing. But the point is, if you take this spike, incorporate all the price points that happen in that spike, and you draw your zone, and there's your zone, right? Let me go back there buying these stocks. Let me see what's going on with ES here. So this is a perfect example, right? What did I just get done saying? This might be a great, very good area to short, right? And what did I say after that? But I need to see my volume setup. I'm not shorting it. We just talked about this, right? This is what I'm talking about. If you're staring at one market, you're tempted. You're like, well, you got this, you got this. The volume's not that impressive overall, the relative volume. I'm going to short that. Well, I wanted to short it too, but I don't break my rules. My main driver is the SI indicator. I did not, there was no setup there. This was not even close to threshold. So I'm not shorting it, right? So if you shorted down here, you probably just, you just had to sit through 5 points of pain in your face. I'm waiting for a setup. Now this is getting interesting because you see where we're coming here. This 4,000 area is really, really important. Not to confuse everybody, but this is spot gamma. These are concentrated options levels, right? So meaning based on his options, spotgamma.com, based on his options analysis, he knows where these large areas of options activity are occurring, where these dealers, because you got to remember, if you go in and you buy, ES calls, the dealers on the other side of that, they have to take them, and then they have to hedge their positions with futures. So you can go down the rabbit hole of all. I mean, it's very, very interesting stuff. But I use these very basic. They are resistance coming into them. They are support coming down to them, right? So I just know, So the dealers are a very big percentage of the trade in the E-mini S&P futures, right? So there's going to be activity at these areas, and you got to view these as resistance until it can get above. Now I know we're at extreme standard deviation of VWAP. I know we're at a market profile composite that I showed you. And then you throw in some huge spot gamma levels. There's a lot going here for a short. Does that mean I'm just blindly going to short it? No. First of all, do you want to short if you see them buying all the underlying stocks that comprise the indices, the highest weighted? No. 2, I don't have a volume setup. If I get a volume setup, absolutely. And what we're coming up to throw in just one more thing, is the red lug that I know is incredibly powerful. So now if this does one more spike here, we get a volume setup, it'd be just outside this, but we'd be like +3 standard deviation from VWAP, red lug, spot gamma levels, volume setup. That is an A+ trade. And I will short that in a heartbeat aggressively, right? But I sit here and I wait. You got to be like a sniper. You can't be antsy. Well, what if this thing runs away here and breaks 20, 30 points? Well, then it runs away and breaks 20, 30 points. There's going to be another setup. There's going to be another opportunity. But I'm not going to force a trade here until I know this is a great area. But what is the greatest thing on the planet for futures trading? The SI indicator. So I'm not putting on a trade until I get a setup down here. And I sit here patiently and wait. And I'm pretty sure we're going to get something here. I'm hoping we can get one huge. What I'm guessing is going to happen here is if they continue to buy these stocks, this pushes up. You see like a 1,000-lot stop run, and that would be an awesome Dumb and Dumber to short. Then it'll be go time. Until then, I wait. Right? Any other questions, Bruce, on that? Let's see what's going on in Nasdaq. How close this is to the red lug as well. Nasdaq.
CL stock sell CL 321 contract.
All right, here we go with CL2. Remember I was saying that was a good shorting area. This is the number. Here's your volume event. So let's just do this quickly. All right. You see swipes. Here's your stop. How do we draw the zone? You pick it up where it started. You can see these swipes as well. Started just before this spike, but I want to include these because you can see the little buy bubble and then sell. This is what triggered the stop. So this bubble here. I'm expecting a stop run any minute here in ES, by the way. So we'll see if I'm right. And then we want to incorporate all the prices that happen in that spike. Coming down to here. So you see why this tick strike's important. It can get really annoying. Don't get me wrong.
151 contracts.
It's really important though, because do you really want to be shorting? I don't care, even if a setup come in. Do you want to be shorting when they're buying? See how these are all max buying, close to it. 15 is the max. You don't want to be standing in front of that. I mean, wait for it to subside. The other thing I want to show you guys is the edge. You can see this in my trade room as well. It's one of the perks. But the edge is close to overbought as well. So now we have that. So we'll come back to that. Let this kind of. And then, so you can see this is like a delayed double whammy. What's a double whammy? the dumb money stop run into the waiting hands of buy ice. So you see the sell stop run.
Iceberg by NQ, 153 contracts.
All right, we'll come back here because this is an area I think is going to potentially fail. So we finally got it set up. I'm going to delete these zones. These were pre-market zones in Nasdaq. Let's delete that. And then I'm going to draw this, and I'm waiting for something ES as well. You can see the buy ice coming here, almost 200. Threshold's 150, so this is a go. You can see the heavy selling here, and somebody took them, right? This was a hidden order. Someone thought they were all, big guy seller, and they tried to swipe it, and they ran into a mouthful of buy ice. So does that mean the buy ice is always right? Absolutely not. We actually have a distinct setup called broken ice. The point is the area is what is important. Somebody's heavy short, somebody's heavy long, right? So when we move out of here, you're probably going to get the big move. And I know this is right near the red lug too, so I'm hoping this fails and I can short this aggressively. But right now, if you're looking to short, you're like, well, I'm going to wait for these things to die down. I'm not going to, these are the stocks that drive the indices that drive the future. So you've got to know what's going on here. Again, all this stuff I'm showing you is on my website, scottpulcinitrader.com. You get discounts to everything. So go check that out.
Yeah, I've
so
I've put your links into the chat for and
Okay.
email, etc. for in YouTube as well as in Discord, Scott.
Cool, thank you. All right, so you see where we're at, right? I mean, there are so many things working for this potential short. If this pauses, if it doesn't, fine. Then I can go long too. And now I have my volume set up, right? So I'm going to let this area tell me, do I want to go short or long? I want it to be a short. Does that mean I'm just going to short? No, I'm going to wait for this. I need to wait for this zone to fail. So per my rules at the red lug, I will take shorts aggressively outside the zone. So what does that mean? Again, ATR is 36.56. So 36.75. What is going on with this phone? Sorry. So how do we do this? Find the bottom of the zone. You can see 12,349. So I'm going to go 37 points outside of there. 36.75. So that puts me at 12.75. That is where I will short this market aggressively. Right. And I know that's far away, but that is what the current volatility is dictating for the way I trade. What did I say? 12. What did I say? 12.25. Yeah. So that's where I will short that. I can only put on two. Two might be too many, right? So it's 37 point, what did I say, 37 points below. If I get filled on that, I got to put my stop 37 points above. That's 74 plus the size of the zone. So that's 84 points that I'm risking on this trade. Well, that's what the volatility is telling me I need to risk, according to my rules. So now we come over to here. Let's see if I have the right size on. What did I say, 84 points? So I can put on a 2-lot. Right, this is another perk of my room. You guys get this. Don't email me asking for the spreadsheet. It's one of the perks of my room. So you got to remember, my room is a paid room, right? So it's like, I can't come on here and then give everything away. That the guys that are paying for the information in my room are gonna be like, well, what the hell am I paying for, right? So please understand, not a lot. I give you guys a lot. You can trade on your own with the stuff I'm giving you, right? But there's definite perks of my room that you get. That's part of the paid service, right? And I work hard at what I do, and I can't tell you how many emails I get asking, why would you give this information out? Are you crazy? Blah, blah, blah. You know why? Because I am a jaded trader. I have PTSD from getting blown out of the game, being a millionaire to zero and not being able to make money in the markets after I told you I was a big scalper, right? So my goal in life is literally to arm retail traders to fight against the big money. That makes me feel good. It makes me feel awesome when traders make money. So that is my driver. A lot of people don't believe that. I don't really care. That's why I do it. And when I teach, it helps me too. It helps me stay grounded. I don't lose my mind because I have a very strong potential to go on tilt and break stuff when I'm losing. I don't do it so much at my age now, but I used to. it just keeps me going because when I'm on a webinar, I can't lose my mind, right? I mean, I can, but I look like a fool. So it just helps me, and it helps me to talk things out too. So that's another reason that I teach. But anyway, you can see here, this is another perk of my room. You know, you get your real-time squawk stuff, and then this is called the edge. So this is showing me that right now, out of the 500 stocks that comprise the E-mini S&P, almost 300 of them, or 73.5%, are above their 5-minute market profiles. They're called TAS boxes. That's what it's a TAS product. You guys, TAS. You guys can Google it. This is not available to the public right now. I'm not sure why. So you can see over here too. This is all the same stuff that I'm looking at on my computer. So anyway, the point is, when you see this stuff overbought over the 67% line, you want to be very, very, very careful of initiating longs until this thing pulls back, right? Kind of like right at the open. You see this. This was oversold. What happened at the open when that was oversold? Well, let's take a look. That was 835 Central. 835 Central right there. Hey, what happened? Rip, right? So be very careful. If you have this product or you're in my room, they all know this. You don't want to be initiating longs when this thing, it doesn't mean it can't go to 100%. It could. It's very rare. But we saw like Friday, that was a rare day too. We saw this thing hanging at 90% for like an hour. I've never seen that. But majority of the time, high percentage of the time, you get a spike and then the market will pull back, right? It's because it's just like a reversion trade. You get these algos that fade the excessiveness. So the point is, this is overbought. I know we're in an important area. If somehow, some way we can stay within an ATR of the zone, I really, 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 really want to short this zone. All right, so let's see what happens here. So remember, if this gets a full ATR above this zone, this short is disqualified. Then what will I do? Well, at that point, we're probably going to build new lugs. That means we'll bust through the red lug that's right here. We'll have new lugs. What I would like to see is the full ATR, a retest, a failure, and then I will go long. But for right now, as long as this can hold inside of an ATR, I will short this puppy back down here. Let me actually get this set up on my other accounts as well. Any questions, Bruce?
Yes, lots of questions that popped in here. So
There they are.
Hold on a minute. Yeah, JC, first off, well, everybody, Scott is basing the ATR off of the 5-minute candlestick chart that he is accessing in Thinkorswim. So it's just a very simple
Right,
indicator.
it's just a 14 period. It's just default 14. You see it right there, ATR 14 Wilders.
Yeah.
If you Google ATR Wilders, this was originally like for a daily type trade, like he would use a 14-day period. So it's just based on 14 periods, meaning it's just basing it off the last 14 5-minute bars and the volatility, right? That's all it is. And it's default. I don't change much, right? Like I don't, even with the market profile, you get guys that are cutting off like tails and stuff like that. I just let things be as they are. I want to see things as, you know, almost everyone else is seeing them as far as, you know, trading wise. And I just come up with my system based on that. I don't change stuff. You'd be amazed. Like I'm showing people, like we're working on this trade in my room, and you know, back in the day we would be talking about the ATR, and some guys would be like, well, why don't you take a moving average subset of the ATR with I'm like, well, for what reason? Like, you guys don't have to make this complicated. I can't tell you how many traders do that. Some of you guys are too smart for your own good, and it's hurting your trading. The more you try to add to your trading, most likely, almost every time, the worse you're going to do, because you're going to get conflicting information. The more you need, and the reason traders do that, again, all you got to do is read Trading in the Zone, is because you're trying to make something, trying to make it more, I can't think of the word, sure. Like you think the more things you add to your trading, the more sure of the trade you're going to be. It doesn't exist, guys. Trading is a probabilities game. Yes, you have an edge, but even that edge, like I have an extreme edge, and I know it, and it doesn't work all the time. You see it all the time. You see my P&L. I have drawdowns too, but I know, like August was brutal, right? That was a terrible late July. August was a pretty big drawdown, right? But I know with the edge, I just keep taking my trades. You're gonna have this, and then your P&L will look like that, right? But it's a probabilities game. So I don't care what you add to your chart, you're never gonna get the for sure trade. So this is starting to. Go ahead, Bruce. I'm sorry. I'm glad I'm stopping right there because I don't want to get on my usual tangent. So that did not get an ATR above here, right? So this short idea is still relevant. So you may say, well, why do you got to wait till down there? Because my system makes the market get outside of a full ATR for me to take the trade. Just make sure that's right. Is that right? 50, yeah. 37, yeah, that's right. And guys, this is from trial and error. I just don't throw random numbers up and be like, you know what, I'm going to just go outside and ATR. It's from watching, again, thousands of these setups, and I determine, hey, is the best place to just jump in right in the middle of the zone? You don't think I tried that right when I got this? And I guarantee half of you people that get this, traders that get this, are going to try that right away. Like, why? I don't need to wait for that. I'm going to get in right here, right? Okay, yeah, you might get lucky, but trust me, I've learned the hard way of just jumping in the middle of the zone. That's why I have the rules I have. It's from trial and error of getting my head kicked in for a while, right? So yeah, you can short right now. There's enough going for this where you can be aggressive right in the zone. You can do whatever you want to do. I wait per my rules because I've seen it enough times. I force this market to get a full ATR out of here before I short it. Next question, Bruce.
Yeah, hold on. There's a lot. Guys, Scott's email is in here and his links are in here in YouTube, also in Discord. So if you want to reach out to him or you want to find out more about some of the courses and some of the things he's offering, they're in there. Let's see.
So right here, before you ask the question, I'm making this one big zone because you had the stop run and then you had the buy ice, and that literally stretched from this is a 100-point zone, guys. So it's like it is what it is. Like, do I wish it was a 100-point zone? I wish it was a 10-point zone, but it's a 100-point zone. So if you want to trade this particular setup, you've got to risk, an ATR outside of the zone. So now you're saying you got to risk, if ATR right now is 41, so you're basically risking 180 points on a trade, 180 ticks, I should say. If that's too much, then you just pass up on this setup and wait for another one. There's another one right around the corner. But, you can't make the market do what you want to do. I'm going to get rid of this sell ice zone. Right? So this is the zone of what just happened in here. So you can bet whatever way this market moved, and this did get an ATR. So this did get an ATR above here. So you see this, right? So this was an ultimate double whammy. What's the double whammy? It's the dumb money puke into the waiting hands of buy ice, right? Or the other way. So in this instance, it was a sell stop run into buy ice. There's your ATR. There's your retest. So now I could go along this setup. I pretty much can only trade on one line. Now here we go with this thing. Hold on. I gotta exit out of this. I'll bring it back here in a second. So quickly, so I don't miss this trade. And my room better have caught the other trade that we've been working on, or I'm going to be very upset with everybody. You're going to get verbal lashings in the PM webinar. 40, 42, 41. And I go 10%, so 45 ticks out of here, I can go long this. So that's 51, 83.51. So remember, I know I said I wanted to be short. Does that mean I force my will on the market and just short just because? Well, this volume setup is bullish. So I'm not going to go short. The real-time volume, which is the most important thing that you can look at, is telling me this is bullish. It got an ATR above here. Here's your retest. If this triggers, I'm going long. Right? See how that works? The problem is with this, I just remembered, we're right by the red lug, I think. So I may not take this unless the relative volume, yeah, see, we're right by the red lug, so let me see what the relative volume looks like. The only time I will take trades into the major lugs is the relative volume is extremely elevated. Yes, it was elevated here. It was almost 4 times, but now as we approach the lug, it's not elevated anymore, so I'm not going to take that long right now. Right, so as we're moving up here closer, hopefully I didn't get filled there. It's only normal, so I'm not going to go long here. And I did get filled, of course. All right, so I'm just out. I'm not taking that long right now. And guys, if you make a mistake, get out of your trade. Don't sit there and hold it and hope it comes back. I can't tell you how many. It's probably over $1 million that I've lost, like making a mistake and then waiting, hoping it comes back so I can just scratch a trade and then watching this and then losing huge money. Just get out, take your loss, move on, wait for the next trade. So I was going to go long that, but the red lug's right here. The relative volume is not impressive coming into that red lug, so I'm not taking a long setup off the setups. So I'll just wait. Well, if this is truly bullish, it's going to bust through and form new lugs. There will be another setup, and I'll go long on that one. But I can't go short this because we already got an ATR above here. Hopefully that makes sense. All right, go ahead, Bruce. Sorry.
No, I'm sorry. So no, this was a while back. Adrian, one of the Adrians in here, that your Ludwig level had changed, but anyway, just wanted to mention that.
Well, they don't change. They'll form new ones. They don't change.
Or formed a new one. Yeah, I'm sorry.
Right. Maybe. Oh yeah, maybe he was saying yes. Let's see.
Yeah, I think so.
No, yes is there. What about NQ? I don't see him.
Okay.
I forgot to restart my Sierra today.
I'm not sure.
Yeah. Hold on. It did.
There you go.
Okay, so we do have new lugs. So what does that mean? Now I can't short this aggressively. I'll still short it, but I short aggressively off of the red lug. We obviously have new lugs there. That is weird that changed. I gotta do Sierra chart. You gotta restart this every morning, and I forgot to restart it. So this could be one of the reasons, or it's not refreshing on its own. Yeah. So yeah, I got new lugs in both markets. I mean, what does that mean? Well, it just means I'm not going to go. I was going to go short any setup aggressively off of the lug. Now you got new lugs. So anything that comes in now, I want to see ATR retest failure because we're dancing around the yellow lug. In Q, it is above the yellow lug. So I could go short. I could go long this trade aggressively, right? If we're dancing around it, then I wait for ATR retest failure either way. If we are firmly above it, which this is firmly above it, then I can take this. Now I can take this setup aggressively to the long side because we're above the yellow lug. So now I just do the same process, 33.14. So I go 10% of an ATR, so it puts me at 36 quarter points. So 36 points above here puts me at 96.50, 96.75. I can go long this market. So if I do that, that, and then the red lug, I just want to make sure red lug's not too close. Yeah, red lug's up at 455. So if I go long there, it's still not a great risk reward trade as far as, because it could stop at the lug, but I will take that long for a move up to 455. And then we haven't really looked at this stuff today, just to get a bigger picture view. So we've been going over this, I go over this every day in my room, but I talked about this buying tail, and then we did this. I thought the day that this buying tail was put in, so buying tails either way are instant rejection, right? So when this market instantly rejected, I expected the market to do that. And I told my room, I said, this is just sitting here. If this gets back below this tail, this thing's going to do that. Well, it did sit there, which I thought was kind of strange, but it ended up launching out of there. And then it came down and just put in another tail. So now what we're coming to actually is you want to pay very close attention. That red lug's right in here. This is going to be actually a very good short opportunity once we get in here. Why? This is what this zone is for. You can see everything that's happened in this zone. This is another thing you guys want to learn to drop. One of these days I'm going to put out a course on this. I've been working on like so many different things, but you get directional conviction down, selling tail, breakdown, selling tail, directional conviction down. Very, very, very important zone. And it's a pretty wide zone. Doesn't mean you just short it blindly, but this is 408 up to 460, 465. Where was that red lug? 455. So if this market continues to move straight into that zone, any short, I'll still go long in the setup that I just showed you, but this is a very important zone where this market could fail easily. So in another instance where I'll be aggressive, I don't care what the lugs look like up here. If I get a signal in here, I'm shorting it aggressively because I know how important this zone is, right? So pay attention to that zone, and it looks like we're going straight there. So I will go long right now, but I'm watching that 12,450 area. That's the lug. the other day where we broke down from and caused that huge directional conviction. I just showed you. This is just another way of looking at it, right? It's right there. So important. It may not even get up there. I mean, you still have this market profile composite it needs to get through, but if it does get through that, this is going to be a very good short opportunity for me. All right. Anything else on that, Bruce? No signals in ES, by the way.
There was a question about your thoughts on who's making the majority of the trades in there. Market makers, hedge funds, institutions, retail.
Don't care. I honestly don't care. I care about. That's just like asking, what do you think they're doing? Are they hedging? Are they hedging options? Are they getting out of positions? I don't care, and neither should you. It doesn't matter. You're never going to know. So why waste your time even trying to figure out why? It's the area is what is important. I don't care if this buy ice area or this, what was this? Hold on, I can't remember. Yeah. I don't care if this buy ice area was somebody hedging, somebody getting out, somebody blah, blah, blah. I don't care. I know there's two sides of the trade. I know somebody's wrong here, and that's what causes when you get these volume events that are above the threshold, that's what causes the big moves out of there. It's basically just guys puking out their positions, right? So that's what I pay attention to. You're never going to know what this is or why they're doing it unless you're sitting behind them watching them trade, right? So don't waste your time. Know the area, learn how the markets react to these areas and what the tendencies are, and then you have yourself an edge. This is the greatest edge you can possibly have in futures trading. I've said it about 4,000 times, and I'll keep saying it.
Yeah, I mean, I think, Scott, like your answer about you don't have to be an engineer to drive a car and know how a car works, all the details.
Right.
You just need to know how to drive the car.
Right.
So, or turn on a light
Same as
bulb.
mine.
Yeah.
Yeah, the light bulb analogy. I use that every webinar, right? You walk in a room and it's dark. Do you need to unscrew the light bulb and break it and look into it to see how it works? Or do you just want to flip the switch and know that you have light, right? So it's like, I know that's simplistic. I try to use simplicity in everything that I do. I mean, I am a pretty simple man. I'm just kidding. But I mean, I don't think I'm an Einstein. I don't think I'm an idiot either. But I do know the simpler you make your trading, the better you're going to do, right? Kind of like, how simple was this one, by the way? The lug work down here in wheat. Remember I got out right there? Oh yeah, that's a 11-cent swipe up from there. You see where I got out? Yeah, that's why I use my lugs. Like, guys, SI indicators number one, lugs are close second as far as reliability and targets and so on and so forth. They're I just sit in, you should see my room. The room's just like, I can't believe these things. How does that work every time? I don't know her inputs. Once again, I know they work. I don't usually put anything in my trading that I don't really understand what it is, right? But I tell this story all the time. One of the guys that I mentored with the SI indicator stuff kept telling me about these things, and he made $1.5 million in like 2 months. And he started out trading micros, so he wasn't some big trader to start with, but he just kept seeing the same thing over and over and over. Kind of like when I took off as a trader, I kept seeing the same thing over and over and over in the order flow. And one of my gifts was, it feels the same to me whether I'm wrong, right or wrong with a 1 lot versus 1,000 lot. It's not about the money; it's about being right or wrong. If you can get to that point in your trading mindset, that's when you can really explode and make huge money, because you're not trading off of the money; you're trading off of what you're seeing in the market and about being right and wrong. So anyway, he kept telling me about these things for months and months and months, and I finally looked at him and I'm like, then I watched him for months and months and months, and I'm like, okay, these things are ridiculous. Then we got Pamela Ludwig. I did a webinar with her. You guys have access to that. If you don't, just email me. It's in this room. It's all over the room. I've said it about 50 times. If not, email me. I'll give you a link to that. And she's actually part of my trade room now. So she's in there all the time. And, she says what she sees a lot of the times. And then she's also saying, hey, roll your lugs to the new month. So it's very convenient having her as part of the room as well. Just participating. She doesn't do, even though I'm trying to get her to do another webinar, which I think she'll do shortly. But anyway, I was just showing you how powerful these things are. And when you can use them in conjunction with your SI setups, you have an extreme edge. If you were just to wait, granted, I'd say 2% of the traders on this webinar could be that patient. If you just waited 4 lugs with volume setups, and that's the only time you trade is at the major lugs, you would be an extremely, extremely successful trader. The problem is most people aren't that patient, and then they see something else, and they want to do something else, and this and this and this, right? But if you have that kind of patience, if you just wait for volume setups at the lugs, you will do very well. Anything else, Bruce?
No, I think we're pretty well caught up here. Yep.
All right. So not really anything going on now. See what happened here in gold. Probably missed a trade, per usual. All right, so I'm going to get rid of this one because this was the most recent one was this. So remember we said I was looking for, I wanted to see a little swipe lower to touch the red lug, then I would have gone long aggressively, but it didn't. So because we're below the yellow lug, I wait for ATR retest failure. Well, this is definitely an ATR, 20.7, so 21 ticks. Right, the top of this zone was 62, so we needed to see 83 as an ATR. That got an ATR, so now all I need to see to trade this is that was your ATR. I need to see a retest failure, and I'll go along right there. Does that mean it's going to retest? No, they don't retest every time. Again, this is from my personal experience. I don't have the exact stats from watching thousands of these. My estimate is 80% of the time it'll come back and retest, especially in certain markets like gold and crude and natural gas. It's probably more than 80% of the time it'll retest the zone. Well, what does that mean? Well, 20% of the time it doesn't. So if you're looking for a long and you're like all excited to go long and it doesn't retest and it goes like that, you're going to miss the trade, right? So you have to just decide, what are my rules? I know my rules are below the yellow lug, I wait for retest. If it doesn't and it does this, well, that sucks. On to the next trade, right? Because I have my rules. Guys, you're going against algos. You have to trade like an algo. Right? Algos don't say, well, my rules are waiting for a retest, but I'm just going to, I'm just going to go along anyway. That's why algos make money and most retail traders don't, because they have rules and they follow the rules. So if you want to beat the algos, you have to trade like the algos. And, I know there's traders on here that have watched many of my webinars, and I say the same thing over and over and over. One, because it's important, and I want to drill it into your heads too. There's always new traders on here, so that's why I go over the basics all the time. And it's good to go hear the basics all the time because you forget. You think, oh yeah, I forgot that I should be doing that. So that's why I repeat myself all the time. And some guy emailed me, this was like 2 months ago, probably longer than that, and he's like, I think I was doing the webinar for Apex, the funding. Again, just go to I'll show you guys. I do this every time. So here, all this stuff is discounts, right? Bookmap, Apex, Trader Sync. This is the journal stuff. You guys should be using something like this. This is the best one I've seen. Tick Strike, Spot Gamma, Rhythmic. This is just to get the feed for your CME for the MBO data. But anyway, I had a guy email me and he's like, because I sent out an email about the Apex webinar. I did one about talking about the funding and what you guys should be using, something like that. If you're testing out strategies or you're new, do not be blowing out $10, $20, $50,000 accounts as you're learning. Use one of those. It costs a fee, but it's not like you're losing, it's nominal versus what you'd be risking if you're wrong consistently while you're learning something. But anyway, he emails me and his exact words were, oh, great, webinar, do we have to hear about how you made millions of dollars and how you were the greatest trader again? It's like, first of all, guys, I'm not bragging that I made millions of dollars. One, it's good to try to learn from somebody that actually was successful, but I'm not $1 million trader anymore, right? The reason I'm not $1 million trader anymore is because my trading style disappeared when I was just scalping, staring at the trading dome all day long. It doesn't get much simpler than that. Well, that just all went away when the algos started to take over. The volatility at the time, this was like 2006, 2005, when the volatility started to dry up and then the algos took over, it was impossible. And it's still impossible. That's why I don't scalp. So anyway, I'm not bragging. The reason I'm telling you guys, I'd be bragging if I still had it, right? It's like, if it was still that easy for me, yeah, I'd be bragging. I'm trying to teach you guys the lessons, both good and bad, of what I've gone through, the trials and tribulations. So that guy can go screw himself if he's on here. Sorry for the language, but that was pretty insulting. It's like, I'm not in here bragging. I'm trying to teach you guys the rights and wrongs of trading that I've gone through for 20 plus years, good and bad. So anyway, I thought I'd just throw that out in case he's on here. I'm giving him the finger to my screen. Sorry, Bruce, that's not family oriented, but that one kind of bothered me. It's like the wealth of information I'm giving you guys from my errors too, even live, like my trade room, what the traders are getting out of there. They're seeing me raw, live, uncut every day, making mistakes, getting mad, going on tilt. Like I almost went on tilt yesterday because I kept making mistakes and forgetting orders were in the order book in one of my other accounts because I have so much going on, and then every single one of them is against me. Like I never look over and be, oh, I made a mistake there. I had an order in the book. Oh wow, look at that. That's 80 points in my favor. No, it's always against me. So things like that, right? So when I'm doing this live, it's it's for you guys to learn good and bad. Like wow, I don't want to do that, or that's really good information. So point is that was really insulting. One other thing I want to point out here, this was let's see why this isn't showing the quantity on this swipe. That's interesting.
Try going up to yeah, it should
well,
be
no,
in
I
there.
could see it. It's because I'm colorblind. I couldn't see this.
You can
Like, I
also,
literally could
Scott,
not.
you can go up to the dimmer on the heat map up there, and
Yeah.
then slide it. Yeah, and then you'll see it.
All right. Okay, so what I was pointing out here, we don't trade off of these yet. This will be in my new course. We'll talk about this one of these years. I put it out, but this was 1,600. Somebody swiped 1,600 E-mini S&P futures here. Swiped them down, right? Nothing showed up here. This is the subchart stuff. So it wasn't a stop run. So all swipes, all stops are swipes. Not all swipes are stops. And you can see it right here. This was a swipe that was not a stop run. Does that mean it's not important? No, this is an important area too, where you could potentially trade this zone. You draw that, you can see it clear as day right there. Somebody got loaded up. Somebody had some orders in the order book that got swiped. So whoever was long here was like, oh crap, what just happened there? And it worked out for them. Whoever swiped this, well, was not a good decision, right? Because the market did this. But you can see it's the same thing as the SI indicator zone. What happened? Hey, we moved back. What did we do? We retested. Let's see where we're at now. I don't know if it moved away much, but guys, it's all about volume. It's all about real-time volume. I mean, look at that. Look what happened there. And then it's bouncing off that area again. You can use this in your trading as well. This is why Bookmap is absolutely incredible. It's why I do these webinars, because this information is, if you're not using this, you do not have all the information. I don't care how great of a trader you are. It would behoove you to know, hey, somebody just tried to swipe down and push this market with 1,700 contracts, and the market gave them the finger, right? And then look what happened, right? Moved away, retest, moved away, retest. So this could be part of your trade plan. I look for huge swipes, and then I wait for the market to violate those swipes, and then I get in, or I play those swipes once the market moves away, retest, and then I get in, right? The opportunities are endless in here, guys. That's why I said this is the science. The art is how you trade them. All right, I'm running out of gas. There's not anything going on. I will watch this zone carefully in Nasdaq. We did get, let's see, we didn't get an ATR above here. ATR is 29.54. We got up to pretty much 79. The top of the zone was 60. Yeah, so we only got about 19 points above here. So remember, I'll still go along this aggressively because we're above the yellow lug. But if this breaks down and we go 29 point or 30 points below here and we do retest failure, then I'll go short. The whole reason I'm waiting for retest failure is because we're above the yellow lug. That's why I would take this aggressively and this conservatively. So hopefully that makes sense. All right, Bruce, if there's no other questions, not a lot going on here. Pretty much all I did was that week trade, and that wasn't even on, I didn't even enter that on the webinar. But, some days you guys, this is just trading. If you have your system and you have your setups and you wait for, this is where I make mistakes, by the way, for getting orders in the order book. Then you just don't get a trade. Some days you don't force stuff. You just say, okay, nothing going on today. I'm going to go golf or whatever, right?
Yeah. No, guys, I mean, the same old questions are kind of popping up again and again about ATR and Ludwig levels. So, like, I know you've answered it, Scott. It's ludwiglevels.com. And then ATR, it's off of the 5-minute candlestick chart. It's the Wilder's 14. Guys, if you came in late, that's it. But like, we're just going to stop it at that. I think that should answer the questions. And if you have other questions, I put the links in there in the chat. You can see Scott's contact information or his websites, etc., like he showed. So hopefully that'll answer your questions. Other than that, Scott, no, I think we're all set here. You got a lot of smiley faces and laughing, crying emojis after that last rant.
Which one where I told the guy to screw off? That one?
yeah, pretty much.
Because I'm a person too. Like, I'm a human being, right? It's like, even trading, like, I get emotional and stuff like that. That's just human nature. And you don't want to. My last small rant is, you don't want to try to contain your emotions. You hear all these trading say, I'll just say the same thing, right? Like, you have to acknowledge your emotions. You don't just pretend like they're not happening, but you got to keep yourself in check and just know if you're following your rules. At the end of the day, you not judge yourself by your P&L. You judge yourself on whether you followed your rules or not. You're going to have days that you follow all your rules, and it's going to be a loser. You can go to bed feeling satisfied knowing you did everything right that day. Just the edge just didn't work out. That's what trading is. Just like a casino. They go to bed, the CEO goes to bed sometimes at these casinos, and a whale came in and waxed him for $5 million. Does he flip out and change the rules of blackjack the next day? No, he knows the odds are in his favor, the math's in his favor, he has an edge. The casino has an edge. By the end of the year, they will be profitable. It's the same thing with this. You're going to have bad days. As long as you followed your rules, controlled your risk, it's on to the next day, on to the next trade, on to the next trade. And you will make money if you have a discernible edge. And this is a discernible edge, and that's what I'm trying to show you guys. So I'm watching this closely now. If this can bust through here and make new lugs, remember, I didn't want to go long off this setup. Remember, I just canceled that order. I didn't, because I didn't realize we were with lugs. But say nothing else comes in here, right? This was that monster double whammy. This busts through, we form new lugs, and this comes back, retest fails. I'll go long off of this setup and or anything new, right? So keep an eye on crude here. So this, this is an important zone. Like I said, if this can get through this zone here, which it looks like it's going to, well, then you want to pay close attention to this zone right here where this broke down from. This is going to be a good shorting opportunity. If not there, then any of these zones in this high volume node. This market is still bearish. The best trades in this market have been waiting for retests of the areas. You can see every single one of them has been absolutely hammered. So you could just say, I'm crude, I'm just waiting for retest of zones to short. I'm going to short into the up moves, right? All right, that's all I got. Do this every day in my trade room, twice a day. So if you guys want to learn, that's the place to come. We got some cool trades going on in there too, and shorter term trades like I've been talking about. So, all right, thanks for having me, Bruce. I'll see everybody next Thursday.
All right, excellent. Thank you, Scott, and we'll see you then.
Thanks. Talk to you later.
Bye.